is down over 1%. Broader markets, individual stocks are still very active. But the star sector of the day is PSU banks.
Yeah.
The Nifty PSU banking index is up nearly 2.5%. And look at the kind of gains that we're seeing in many of these names. A Bank of Maharashtra, 4.5% up. PNB is up nearly 3.7%. Union Bank, 3%. Bank of Baroda up close to about 3% odd. I mean, even some of the private financials like an RBL, Canara, across the board, I think the mid-cap banks are very, very active. So there's something going on there.
Well, that's right, Rima. And from the broader markets, a few stocks I was looking at just in the last few minutes. J&K Bank, you pull up the intraday chart out there. That as well is moving with some good traction, currently at the high point of the day. Pull up an intraday chart of Suzlon. I think that as well has seen a bit of a spike up in the last few minutes. So good going on some of these names. On the flip side, Belrise, I think it's up close to around 15% in this month itself. For today's trading session, it's currently moved to the low point of the day. But what's the reading then in terms of the markets? Mitesh Thakkar joins us to help us out with his call. Mitesh, what's the call? 150 points down, opportunity to buy, or you're seeking lower levels?
I think, good afternoon. One, we were slightly overbought, so just a pullback to me. I think it will be a buying opportunity, slightly more lower if you get it, closer to about 25, 350, 380 is the best entry zone, though we're still far away from that. But I think if you get it there, the risk reward equation becomes very favorable to you. But as you rightly mentioned, the stocks and the directional bias on a lot of these stocks remains very, very positive. And therefore, I think, it might be good if you can, trade with clearly long biases and avoid any kind of shorting idea. So on the stocks, I'm trading with long bias, but on the index, I would wait for more declines to buy into.
Okay. You said you would wait for further declines on the Nifty to buy. So what would be an appropriate level?
So I mentioned about 25, 350, 380 is the entry zone on the index. And then, that will give an entry with a stop just below levels of 25,300, 290 is what I would recommend on this spot. And we'll maintain those targets of 25, 700, 750 levels.
And stocks, Mitesh?
So stocks, I have a buy on DV's Lab. I think that's one stock which is just trying to break on the upside. So buy here with a stop below levels of 67.60. Look at targets of around 69.20. And Canara Bank, I think you were mentioning PSU banks as a pack which is doing well. So Canara Bank is on the verge of breakout. The intraday highs around 114.6 and the breakout happens about 115. So buy about 115, keep a stop at 112.5 and look for targets of 121.
Okay, got that. Let's talk about IDBI Bank. The government is likely to invite financial bids for IDBI Bank. Sapna is here with the latest. Sapna?
Absolutely. What we're given to understand is that the call for the financial bids for the stake sale of government equity as well as the LIC's, share in IDBI Bank, that could be sooner than later, the invitation for financial bids. We are also given to understand that the government is close to kind of finalizing or concluding the share purchase agreement with the potential bidders for IDBI Bank. And once that's over, the next stage, of course, is the calling for the financial bids. So in all likelihood, it's just possible that before H1 ends, either the financial bids are going to be called for or maybe could be even earlier than that. There is a process that's involved, so it's a ministerial panel that will have to give the approval in terms of the finalization of the SPA, that's a share purchase agreement, and once that's done, the next stage comes in. The finance minister, in the meanwhile, has already indicated that they expect, or rather the government expects to conclude the IDBI Bank transaction in FY26 itself. So I think the next 2 odd months are going to be very crucial. We'll have a clear sense before the month of September as to where the transaction is going. But, this much I can indicate very clearly that everything is at a very advanced stage. Once the SPA is done, the next stage is the calling for the financial bids, and that will, hopefully we should be hearing soon on that.
Okay, all right. Thanks a lot for that, Sapna. Well, let's go across to Deepan to ask him about, all right. I think first let's address the news that's at the bottom of your screen. Insurance regulatory body IRDAI has been without a head for almost 4 months. Yash is now picking up. The post of chairman will soon be filled. Yash, who are the likely contenders?
Well, Nigel, so as you rightly pointed out, it's since March that the previous IRDI chairperson, Debashish Panda, vacated the position. And since then, the government has been on the lookout when it comes to the next IRDI chairperson. What we've been given to understand from our sources is that the current Department of Financial Services or DFS Secretary M. Nagaraju has emerged as a likely contender when it comes to becoming the next IRDI chairperson. There are two more candidates, of course, Finance Secretary Ajay Seth as well as Defense Secretary Giridhar Armane, which we had reported were in the race as far as the next IRDI chairperson is concerned. But the name as far as M. Nagaraju is concerned is very, very crucial. Someone who understands the sector, someone who's been working closely with the sector in his current role of Department of Financial Services Secretary. The name becomes very important, as a prospective candidate when it comes to taking over the position of IRDI chairperson. Very recently, what makes the name more important is the fact that in his capacity of DFS Secretary, Mr. M. Nagaraju also met the CEOs of the life insurance industry, general insurance industry, as well as health insurance industry. Importantly, for the life insurance sector, he discussed the point on mis-selling, and he assured the industry, this is what we were given to understand from our sources, that there won't be any action which will be taken on the contentious issue of restricting bank assurance sales, for the purpose of insurance sales, as long as the industry is responsible with keeping the number on mis-selling low. So that becomes very important, and that makes his role as a prospective candidate for the next IRDI chairman very, very crucial and positive and beneficial for the industry.
Thank you very much for that. That's an important story. Dipan is now with us from Elixir Equities. Dipan, any thoughts on this name as the new IRDAI potential chief? And what's happening in banks today, mid-cap banks?
Yeah, Rima, thank you for having me on your show. No, I have no comments on the new IRDAI chief, but I'm sure he'll do a great job. And insurance regulation, I think, has been phenomenal as compared to some of the issues we have faced on the stockbroking and the investor side. I think on the insurance side, I think things have been pretty much smooth. It's been very heavily regulated industry, which is great for investors because that does tend to protect minority shareholders. Coming specifically to banks, I think that's emerging as the favorite sector amongst all professional investors. It is one sector where we are seeing growth coming in now because of lower interest rates, which have been cut by RBI, and improvement in the overall loan growth rates. At the same time, I think there will be some amount of reduction in terms of provisioning as compared to the pre-provisioning profits, and valuations are still reasonable. A lot of investors who want to beat the Sensex and Nifty, they have to get adequately weighted in these financials because I think almost 33% plus is banks and other financials. So I think it's justified, and this run, I would say this phase of the bull market may be led by the banks.
Okay, all right, got that. Any view on a couple of these other names, Dipan? We had a couple of these stocks that were moving around earlier today. Shilpa Medicare, any view on this name?
Yeah, Nigel, I think Shilpa Medicare, has got a lot of, I would say, support from very influential investors per se. It's a great company. Its main differentiating point is that it is manufacturing very difficult to manufacture APIs for cancer medication. And it's got backward integration, lowest cost of production, and a lot of their products have been approved in the US FDA. Past track record, 3-4 years, I would say was okay. But I think going forward, the growth phase is expected to be phenomenal. A lot of investors, analysts saying 25-30% growth rate also is possible. And if you look at the entire pharma industry, the winners here are the ones who identify key molecules where there's limited competition, difficult to manufacture, cost advantage. And then those companies are doing exceptionally well. And I think Shilpa Medicare is one of those companies as well. And as I said, I think it's got a lot of influential investors interested in the company, which is why always from time to time we see a lot of momentum in the stock as well.
Okay, Shilpa Medicare. Let's get back to the financial space. Clearly in the spotlight, Karnataka Bank, RBL Bank are buzzing. Vamakshi is here with the reasons.
Well, Reema, both of these counters are in focus today. Karnataka Bank is down and out in trade today because the top leadership has resigned. Keep in mind that the MD and CEO, Shri Krishnan Harihari Sarma, as well as the executive director, who is Sekhar Rao, both have resigned from their position, citing personal reasons, and that is the reason the stock is taking a knock in today's trading session. But on the flip side, RBL Bank, last I checked, was doing quite well, and that is on the back of a note that has come in from Citi. They've opened a 90-day positive catalyst watch on the counter, have a buy rating, target price of 285. They're expecting the return on asset trajectory to improve by around 45 to 50 basis points, driven by much awaited normalization of credit costs. Now they're expecting the credit cost to normalize to 2.2%, and this would largely be led by the stress in the joint liability group as well as credit card, which will be further subsiding in Q1 as per their expectations, as well as moderation in their slippages to 4.5% as compared to 4.7% in the previous quarter. The repricing of floating rate portfolio mix change in favor of secured segments could also lead to around 28 to 30 basis points of pressure on the NIMs. But however, they also highlight that the NIMs for this company are expected to bottom out much sooner as compared to some of its peers in Q1 itself. They're expecting overall industry average loan growth of 9% year-on-year, 2% sequentially, and deposit growth of 10% year-on-year and 1% sequentially. So therefore, they have given a thumbs up to RBL Bank. The stock resultantly is up almost 4% in trade today.
Got it. Okay. All right. Thanks a lot for that, Vama. Well, going back to Dipan. Dipan, pick up the pack from the banking names and also a quick word on IndusInd Bank. I recall, when the stock went down, you were saying with due disclosure, we are in, now we're waiting by. Stock has bounced back considerably, and some of those very, very strong names are doing the rounds to taking over at the helm. Your view on it?
Nigel, this is a case of rising tide taking all boats up. So whether it's RBL Bank or whether it is IndusInd Bank or Bandhan Bank, all these stressed out banks who destroyed a lot of shareholder value and then cleaned up their books, change of management, change of strategy, they seem to have improved their lending standards, collection mechanism. I think all of these banks are going to be the outperformers, the momentum stocks of the banking industry. And that's a lot of investor money and I think speculative money also will go into these banks. So if you have a high risk return appetite and a lower sector weightage, then certainly these companies can do well for you. But within the entire banking space, I'm surprised to say, but yes, I think PSU banks are the darlings. And the reason is that we are going to see an improvement in the P multiples over there, and expansion is certainly taking place over there. You compare the PSU banks and the private sector banks and on various growth metrics, or even in terms of their NPA ratios, all of them are now more or less in line. And PSU banks have improved upon their service, their technology. And again, I think they've been so well capitalized that they are growing their loan book as well. So if you have to pick, then go for the PSU banks. A lot of choices are there depending upon your risk factor. And then there are these erstwhile stressed out banks, which may give good returns. But all of this is kind of, I would say, little high risk, high return. But the stable banks, of course, ICICI, HDFC, Axis Bank, those also should do pretty well.
Got it. Okay. All right. Dipan, stay with us. Let's talk about one of the favorite stocks, Trent. That's getting in trade. Equirus has gone ahead and upgraded the stock to add from reduce. Mangalam, on a day-to-day basis, brokerages, they are having contrary viewers out here. Equirus has turned for the positive. You tell us, what are they saying?
Well, so Equirus hasn't turned a lot of things around in terms of their estimates for Trent because the company had held its annual investor day a couple of weeks ago itself. What they're looking at right now is this decline on the stock price, which is an attractive opportunity for them to buy. So they've upgraded the stock to add from reduce earlier, and they have a target price of 6,400 odd itself. They say that post this near 30% correction that we've seen from its highs amidst concern over future growth, stock now trades at a lot more reasonable valuations. In terms of their estimates, they are modeling for about 75 to 510 store additions over the next 2 to 3 years for Westlife as well as Zudio. 510 stores in Zudio itself, they believe the company will add. They are expecting mid-single digit like-for-like growth. They are modeling 24% standalone revenue compounding, not too different from the company's own guidance of 25% going forward. And they do believe that, apart from Zudio and Westside, which have been proven models for them, they are slightly circumspect on Star, but they are believing that the company will place bets on about 20 experimental ideas Even if one or two of them hit pay dirt, that would be the next leg of growth for Trent itself. They don't see much scope for EBITDA expansion from here on. 17% is what they believe the EBITDA will be over the next couple of financial years versus 16.5% that the company reported in the previous financial year. So all said and done, this 30% correction and a 25% growth runway is what is making them a lot more constructive on the stock than any other fundamental change on Trent right now.
Got it. All right. Well put, Mangalam. Thanks a lot for that. Deepan, what do you make of Trent? Stock was 8,000 rupees. Everyone then started throwing in the towel and it went all the way to around 5,000 rupees. Currently at around 6,200. What's your take?
Najil, first of disclosure, we are invested in it and resisting a lot of temptation to sell, because every time you look at the P multiple 153 times, it was you trading at even higher P multiples. So that does tend to kind of, induce at least a thought in your mind that what are you doing buying such an expensive stock? End of the day, it's a physical business and they can only grow so much. Although growth rates have been phenomenal, eventually it will start to slow down. But look, there's scarcity of stock. It's a very highly fancied company as well, and it's got best-in-class growth rates. So you remain invested, but from a fresh investment perspective, I'm not so sure. There's not much margin of safety. One or two bad quarters, anything going wrong, which results in reducing the P multiple, can certainly lead the stock to underperform. At best, you can expect returns which are in line with the earnings growth, which is about 15-20% or thereabout on a longer term basis, 3 to 5 year basis or so. So I would say it's a hold for us. And maybe if there's a steep correction, you could look at buying into it.
I wanted to ask you about this other name as well, Deepan. Not sure if you track it. Force Motors. The stock saw a very, very sharp correction when the markets went into a tizzy. But just take a look at the bounce. We here at CNBC-TV18 had explained the company, in terms of what's working for them. They launched the Urbania. It has, this, they make engines for the likes of Mercedes as well as of BMW. And the parts are coming together because the focus is on premiumization now. Just take a look at the stock. It's more than 15,500 rupees now. I think it's up more than 50% in 3 months. Any view on this name?
Yeah, I think it's a very conservative management and they hardly speak to the press. So sometimes it's very difficult to understand what their strategies are, and more information about the company is always welcome. But it's a niche player. It's a quality player. It's been around for decades and the company has kept on reinventing itself and keeping itself relevant. And the numbers have been quite phenomenal. And because they are in that particular niche segment where they have a good dominating market share, and it's not so much linked to cycles as much as it is linked to overall investments, say like for ambulances or for mass transportation, I think their turf is pretty much safe. And definitely this manufacturing engines for BMW and Mercedes has been a growth engine for them. So I would say that, look, Force Motor certainly looks interesting at this point of time. Attractive if the stock price were maybe 15-20% lower or so. That would give some more margin of comfort. It was trading at much lower P multiples. Now I think it's fairly valued.
Interesting. Deepan, even when I presented that piece, I had said one of the problems is the management. They're not very, very, they don't have too many analysts meet, so they don't talk to the press as well.
They don't have any analyst meet.
Yeah, that's what. I mean, and I've personally tried to reach out to them. But hopefully, Deepan, in the next 6 months or so, we'll try to feature them here on CNBC-TV18, a management that has never spoken in many, many years. But I'll tell you what, I hope that I'm successful at that.
All I can say, Nigel, is you can try your charm.
Absolutely. Hope it works. Thanks, Deepan, for joining in and giving us your view on a lot of those stocks. Well, time to slip into a short break. On the other side, Jigar Mistry is waiting for us. He'll tell us how he's positioned in the markets and what he likes and what he believes is fairly valued. Welcome back. Well, there's some news at the bottom of your screen. Reliance Defense and Coastal Mechanics to set up a JV at Mihan. And they have got into agreement with the US-based Coastal Mechanics for defense repair upgrade market opportunity. The stock has been buzzing on this hopes that they're going to sign a lot of deals. And we've seen a couple of them that have been signed in the last 2 weeks or so. One notable deal, I think it was a 600 crore deal that was announced in the last 10 sessions or so. And this is another one out there. So we'll have to see how it flows into numbers. But the last I checked, the balance sheet is looking in far better shape. So let's see how that goes. The stock clearly excited. I think it's up more than 20% in the last 1 month or so, 25% actually, to be precise. Well, let's get in Jigar Mistry, co-founder, Point Capital, who joins us. Hi, Jigar. Since there's something happened on defense, let's ask you about that. That's the theme that has been red hot. What's your view on defense? Are you in the camp that believes that in the next 10 years, it's going to be, India has a big opportunity? Or do you believe all these stocks have already factored in the best? How are you all positioned?
Hi, Nigel. Good afternoon. Thank you, as always, for getting me on your show.
Good to have you.
I think forced to choose camp, I'll have to side with the fact that, great opportunity, but we are pricing in more and beyond. Last time I was there, I did mention that we did well in that skirmish, despite a lot of these companies not delivering on time. The opportunity and the runway is large, maybe it's just the start. But essentially, when you do a reverse DCF on a lot of these companies, you are pricing in a lot. Secondly, if you look at the number of shareholders that have increased, in many of these cases, retail has become the largest ownership after the promoter group. And that does not really inspire a lot of confidence, especially when the institutional capital is not backing this up in a big manner. So also the way in which they corrected in the September to February correction in the market, and they've just completely gone back up. So we don't really own a lot in defense.
Can you share some new ideas, Jigar? So much has happened in the markets in the first half of the year, but at the end of it, we've been fairly resilient. Commodities have started declining. Crude prices, particularly, 13% lower last week. Any new trends, any new ideas that have come?
Right. So I think one thing we are taking home, or rather two things I would say, is that, one, eventually the markets will have to transition from a liquidity-driven rally to a more like an earnings-led phase. Right? Because if you look at the FY25 earnings growth, you are still at around 6-7%. And that was also driven by a lot of cyclical considerations. So for the first time, I think since COVID, consensus estimates have started correcting. That used to be the case before COVID in India. For the 5 years, including COVID, you saw a reasonably stable start of the year and end of the year consensus estimates. But for FY26 and FY27, those have started correcting. The one big takeaway, I think, in that transition that we think is happening, it started with the central government, with, giving 1 lakh crore in terms of lower taxes to medium income housing. States, if you look at what they are, for the lack of a better word, call them freebies. What they're giving in terms of freebies, the announcement exceeds 3.5 lakh crore. What's budgeted is still around 1.5 lakh crore or thereabouts. So in that eighth, pay commission is around the corner. If you total that, that's in excess of 3.5 lakh crores. So combined, you're talking about 6 odd lakh crores, which is like % of GDP, coming away from the sort of state central coffers into the hands of people. And then you will have to start looking at what benefits, discretionary, more or less, staples may not be so much. So I think there is an emerging opportunities that I think a lot of these companies and sectors have not performed well. And I think that is one big thing. We are still evaluating. I won't say we have answers to all of those, but that's an interesting space in terms of what's on offer versus what's priced in.
All right, Jigar, I wanted to ask you about the banking names. Today, the frontline names have taken a bit of a breather. And Karnataka Bank is lower because of its own set of issues. But if I look at the other stocks, you look at RBL Bank, you look at J&K Bank, that one as well is higher. RBL Bank is higher. These are banks that are trading at less than 1 time actually price to book. And my colleague Gaurav actually has neatly put this data together. what is your view? Some of these banks, IndusInd Bank, everyone is throwing in the towel at 650 rupees. Boy, oh boy, now you have 850. The problem in some of these is how is the book looking? What's your view? Would you stick to the large cap names, or do you believe some of these smaller names, they're offering some value out there? And we saw a deal with Yes Bank. There could probably be a deal with IDBI Bank. So there is interest and appetite out there for smaller banks. How would you read it?
Absolutely, Nigel. So I think let's take sort of a bigger call first and then boil it down to names. The bigger call is sort of if you looked at, say, a era before 2015, evergreening was abound. After 2015 until I would say 2018, 2019, you had sort of the NPLs come through. And since then, I think, you've shafted the wheat away from the rust. So essentially, you now have a situation where there are two large business models. One that allow you to report ROAs in excess of 2%, which are all these big boys. And then people are aspiring to be around 1% ROA. And there you have a lot of these emerging companies. Some of the names you did mention do report elevated ROAs, but are trading at a lower valuation. That's entirely sort of stock pickers market there. One big part that we are talking about is while we spoke about central and state capex taking a back foot, corporate capex for the first time has crossed the central capex of 11 lakh crores or thereabouts. And now you are looking at net debt issuances from the corporates, which is after a decade, if memory serves, where companies are borrowing to invest rather than repaying debt. So I would, if I sort of had that opportunity, I would much rather focus on corporate banks rather than retail banking incrementally, because I think that's where the money would flow. Obviously, we can't discuss stocks, but I think in terms of names, we would be banking on a lot more corporate lenders and retail lenders incrementally.
Anything in this entire oil marketing companies? We've seen the decline in crude prices. Is there an opportunity in the oil and gas space?
I think yes. Essentially, you will have a situation where we are not budgeting for an elevated level of crude prices as we go. There will be skirmishes which will lead to these spikes, but eventually we are looking at it being in the 60-65 handle. So net, you will sort of model those recurring margins for many of these businesses. We do own one of them in the oil marketing space, but I think beyond a point, this still state-owned, so you can't build a very large exposure. So it's a middling level exposure for us as well, but neither here nor there sort of.
Do you own any two-wheelers in your portfolio?
No, we think they are, representing a very large optionality in terms of who gets to win the EV game. And as far as PEs are concerned, it's a good spray and pray approach for them. It's like spread around $1 billion to a lot of players, and then one of them becomes a winner, and then you take it home. But when you're investing from a public investing space, those optionality become a very large part. And although, as I said, discretionary does present an opportunity, we think two-wheelers are more or less sort of pricing that in. So we don't have a large exposure. We don't have any sort of exposure, so to speak.
Okay, all right, Jigar, good to hear your thoughts. Thanks a lot for joining in and filling us in with all of those details. By the way, look at the bottom of your screen. Those BharatNet orders continue. ITI has signed an agreement with BSNL for NER2 package 15 of the BharatNet project worth around 1,900 crore rupees. Stock locked up 5%. I think that's the circuit limit today. The street likes it. I'm sure our team is trying the management. Maybe we'll try to get you more details on that front. Time to slip into a short break, but Nimesh is waiting for us on the other side. He'll tell us what's happening with dealing rooms, and also then we'll be getting our technical experts to help us out with a couple of calls.
Welcome back. 30 minutes to go to wrap today's trading session. The Nifty is above 25,500 just by a smidge, but it's still down close to about 128 points. So benchmark indices have retraced, seen profit booking after its 4-day run, but mid-cap action activity, positive activity continues. Mitesh is now back with us for a few BTST calls. Mitesh?
Yeah. So actually, I have one estimate on Dora Developers with a stop at about 1395 for targets of 1350. That's one stock which is turning weak. In fact, the reality as a pack is turning slightly in the weaker side. And on the buying side is MGL. It's given a good pullback today. So buy here with a stop below 1474 for targets of 1505.
All right. Thank you very much for that. Let's get to Nimesh now. He's at the National Stock Exchange and he's going to join in with the chatter that he's picked up. Nimesh.
Hi, Rima. So markets marginally under pressure today, but I guess it's more to do with profit booking after the recent run-up that we've seen across the Nifty, Bank Nifty, as well in the broader markets as well. So not very much alarming. In terms of flows, slightly mixed with a negative bias is what my sense is. But again, there is going to be a small MOC basket buying at a leading FID. So that gets impacted in the last 30 minutes of trade. So that's something to watch out for. I guess the sector clearly stands out is the PSUs. Again, the PSUs in general are doing good, but within that, it's a day for the PSU bank stocks to do well. And I guess that's backed by some FI buying as well. I've been saying this for a while now that it's the PSU which is attracting a lot of institutional interest and in terms of flows as well in the last many days, and today is the case as well. Broader markets have seen some bit of profit booking today, but again, nothing alarming, so to speak, a bit of profit booking after the recent run-up. But I guess from a broader market point of view, the fact that now there could be no further supply in terms of blocks and PE stake sales, the sense I'm getting is maybe at least in the very near term, the mid and the small cap indices are likely to outperform.
Indeed, Nimesh. But what about individual stocks? What are you picking up? You've got an interesting list as always.
Thanks, Nigel. So the first stock on my list today is Keynes Technologies. That's been buzzing in trade. Remember, there was a large QIP as well, which happened last week, and after that, you've seen a bit of outperformance. And generally, there is a buying interest back in all the EMS stocks. Dixon is also buzzing in trade, and so is Keynes Technologies in today's market. So that's the first name. The second stock is Indraprastha Medical. For second day running, that's been buzzing up 5-7% last I checked. The volumes have also picked up in that particular stock. And for Indraprastha Medical, the big buzz is that maybe the company is going to announce a large capex. And more, at least the bed capacity can be 3x more from here. So that's the buzz as far as Indraprastha Medical is concerned. The third couple of stocks where there is delivery-based buying in today's market, 361 as well as Interglobe Aviation. Both are buzzing in trade. For Interglobe, apart from the fact that there are bid orders, also now that the trading window is closed for promoters, the risk of a large block seems to be at least away for the time being. So that also explains a bit of short-coming rally as well as buying interest in Interglobe. So that's a stock to watch out for. And the last one is Vintage Coffee. Normally we don't talk about this stock too much, but that's been buzzing in trade today. The flows are strong, as I understand from HNI desk. And also for Vintage Coffee, the buzz is that the company might raise funds via preferential issue very soon. So that's a trigger as far as Vintage Coffee is concerned.
Interesting one, Nimesh. That's new. Vintage Coffee. I was just looking at the financials. They should do 20-30 crores on a quarterly basis of revenues. Last time they did close to around, I think, 100 crores that one. So we'll keep an eye out on all of those names and some coffee as well in that mix. Well, let's focus though on 100 crores is what they did in the past quarter in terms of a revenue and margins of around 18% from, I think, 30-40 crores on a quarterly run rate earlier. But let's talk about the big pharma deal that was announced late last evening, Torrent Pharma as well as JB Chemicals and Pharma. What are the contours of the deal? How will the deal impact business of both of them? And what are brokerages making of the deal? Well, no one better than Ekta to join us and tell us more about all of this. Ekta.
Well, yes, Torrent Pharma has announced a two-phase acquisition of JB Chemicals from KKR, marking one of the largest deals in India's branded pharma space since possibly the Ranbaxy-Sun merger. Torrent will first acquire 46.39% stake for around 11,917 crores and may pick up an additional 2.8% from JB Chemical employees at around 1,600 rupees per share. An open offer for 26% follows at around 1,639 rupees per share, with the total size of the acquisition for Torrent possibly going up to as much as 19,480 odd crores. Now, in the second phase, the companies will merge, with JB shareholders receiving 51 Torrent shares for every 100 held. Now, the deal values JB Chemicals at around 25,689 crores, and 11% discount to its closing price ahead of the deal. With the JB Chemicals acquisition, Torrent Pharma is now poised to rise from the 6th to the 4th largest pharma company in India. The deal, in fact, is expected to boost its domestic revenues by 35%, surpassing 8,600 crores based on FY25 numbers. Torrent will strengthen its dominance in cardiac and gastro segments, gaining top brands like cardiac drug Silicar with sales of 785 crores and gastro drug Metrogil at around 342 crores in terms of a size of a drug. It also secures entry into ophthalmology and expands its footprint in the global CDMO space. Torrent Pharma may in fact fund the JB Chemicals acquisition through a mix of internal accruals, debt and equity via QIP. It could take on as much as 10,000 to 12,500 crores of debt, pushing the combined net debt to around 14,500 crores and a net debt to EBITDA to around 3 times on an FY25 basis, according to analysts. However, analysts including DAM Capital are not overly concerned. They point to Torrent's steady free cash flows and believe a 2 times EV to EBITDA leverage is reasonable and the debt could be paid down in 3 to 4 years. Now, while JB Chemicals currently operates at a lower EBITDA margin than Torrent Pharma, analysts are not overly concerned about that either. Torrent has had a strong track record of cost rationalization as seen in its past acquisitions of Elder, Unichem and Curatio, which saw margin expansions within 1 to 2 years. While we could see near-term dilution, analysts believe the combined entity could target EBITDA margins of 34 to 35% over the next 3 to 4 years. Lastly, what are the brokerages saying? IIFL recommends JB shareholders should avoid tendering in the open offer and wait to swap their shares in the merger. Nomura expects the adjusted EPS accretion in the mid-single to low double digits. They maintain a neutral rating with a target price of 3,580. HSBC expects the deal to be 3% accretive to FY27 estimated EPS estimates. They retain a buy with a target price of 3,775.
Ekta, thank you very much for that comprehensive explanation on the big pharma deal. But 20 minutes left and we wrap up the first half of this calendar year. It's been one roller coaster ride. So much has happened. Hormus is now joining in to break down how the benchmark indices and the broader markets have fared so far in 2025. Hormus?
More action than in an action film, more drama than in a drama film. Well, I guess the markets have seen it all in the first 6 months of 2025, be it tariffs, be it war, be it ceasefires. And after all of this, the Nifty has trumped up with returns of 8.5% in the first 6 months of the year. And this is after an 18% recovery that the index has seen from the lows that it had made at the start of 2025. The Nifty Bank, which is already trading at record highs, is up 13% so far in the first half of this year. And this tinge of green that you see in the mid-cap and the small-cap index is after a near 30% recovery that these indices have seen from the lows that they made earlier this year. Now, which have been the top performers on the Nifty in the first 6 months? No prizes for guessing, but it is BEL and Bajaj Finance. The 6 months, though, belong to the life insurance companies, SBI Life and HDFC Life. Both of them are seeing their second best calendar year already in terms of returns, and Bajaj Finserv, of course. And the underperformers, of course, it is the IT names that form the predominant list. TCS, Infosys, Wipro, all of them in there, along with Trent and, of course, IndusInd Bank, despite a near 35% recovery from the lows. You take a look at the mid-cap index, and Solar Industries has been the talk of the town in the last few months. Almost 80% returns in the first 6 months. Bharat Dynamics, BSE, L&T Finance is up 50% so far this year. What is down 50% this year, though, is Ola Electric, continuing to make new lows from its IPO price, along with names like Oracle Financial, Kalyan Jewellers, Premier Energies too forms a part of this list. Defense has been a common theme. across the Nifty, the mid-caps and even the small caps, because Garden Reach is the top gainer on the small cap index, almost 90%. Narayana Health until last week making new highs. Reddington and Navin Fluorine, after a slew of positive brokerage commentary, is up almost 50% so far this year. And among the underperformers though, it is names like Brainbees Solutions, Anantraj, Natco Pharma, losses of anywhere between 35 to 40%. So it's been an action-packed first half of 2025. Well, the bulls would definitely be hoping that the second half is less action-packed, but it has enough legs to take the Nifty past its record high levels.
Thank you. But action will start, tomorrow? We've got the auto sales numbers for the month of June, which will be out. And the trend is that two-wheelers will continue to accelerate. So expect good numbers from the two-wheelers, thanks to strong domestic demand and some export recovery. Tractors have also seen a healthy uptick because you've seen rural markets beginning to bounce back. But the problem is the passenger vehicles, they're losing steam. Demand continues to remain soft. Inventory correction is also weighed on volumes. So here are some of the CNBC-TV18 estimates year on year for the wholesale numbers. Passenger vehicles on the whole down 5%, two-wheelers up 3%, tractors up 6%, and MHCV down 1%, but that's largely on account of Tata Motors underperforming. Now, when it comes to two-wheelers, Bajaj and Hero MotoCorp sales are seen up close to about 6%. The standout is likely to be TVS Motors, 23% up, while even Royal Enfield is likely to do well. 17% is the estimate in terms of a growth rate. Now, passenger vehicles expect growth. So for Maruti Suzuki, Hyundai, Tata Motors, expect a decline. So sales are seen down between 5 to 8%. Again, here it's M&M Auto, which is bucking the trend, where numbers are, we're expected to see a sales jump of close to about 13%. In CV, Ashok Leyland sales are seen up 3%, M&M Tractor sales seen up 7%, and Escorts is seen up close to about 4%. So two-wheelers, okay so far. But passenger vehicles is likely to remain under pressure in the month of June. But remember, for two-wheelers, there's also the draft notification which has come out talking about a mandatory, a compulsory anti-braking system, ABS, from 1st of January 2026. And if that comes through, we are talking about a cost increase. UBS estimates about a 4,000 to 5,000 rupee per vehicle cost increase, which basically means it will hurt some of the lower priced vehicles, because in percentage terms, it will be a jump in price. So Hero MotoCorp could be affected quite a bit. According to UBS, 77% of Hero MotoCorp's portfolio could be affected because their two-wheelers are not fitted with ABS. So if they have to fit it in, 77% gets affected. Eicher Motors, on the other hand, it's not affected because all the two-wheelers already premium and they already have ABS fitted in it.
Good, you educated me about the bike I come on as well. Great. All right. From a stock market perspective, though, that explains why the rational remarks given with regard to why Hero MotoCorp is under some pressure. Anand Tandon, market expert, joins us on the show. Hi, Anand. Good afternoon. Hope it's a good start to the week for you as well. What are you making of the auto pack? And what do you like out there? If you could tell us from the auto listed stocks or even from the auto ancillaries, is there a couple of stocks that you like?
Well, the two-wheelers are actually priced to perfection and then some. But if you have to pick up something in the two-wheeler space, I guess the one that is showing the best performance, both in the markets as well as in terms of their own performance, is probably TVS. Eicher is, of course, now not only exposed to the domestic market, but international as well. So then it becomes a little more hard to judge. Overall, I'm not particularly bullish on that particular segment. As you mentioned in your roundup just now, tractors is probably a safer bet because for the moment, at least this year, you will get better demand. And we are already seeing that in the numbers. The farm output is also likely to be better. The passenger vehicles, I think too many players in it with too many new models coming in right now. So while you might see volume growth, I think you're still going to be pretty much tied down to the SUV segment. And that there is really only one way to play that, and that is Mahindra's. So there isn't that much of a choice right now. Mahindra is also not particularly cheap. So the best thing is to stick with, probably Mahindra in your portfolio if you want to be having a sector kind of approach, and just stay with it because you're also getting some of the other consumer discretionary spaces involved through the Mahindra listing.
But Mahindra, as you said, M&M is expensive. So in terms of fresh purchases, would you recommend it at these levels?
So by and large, I'm saying that, fresh purchases should be kind of indexed because it is not as if the market overall is very cheap, right? And trying to figure out which sector is doing well when almost all the sectors are priced for a growth which is much higher than what we're likely to see, doesn't leave you too much choice. So you should kind of benchmark your portfolio to some index that you're comfortable with and stick with that. So when you look at the index itself, it is expensive, which means almost all the sectors and all the stocks involved will also be. That said, the market is still moving up, and if you're therefore playing the momentum, the best way of doing it is to be somewhat passive, even in an actively managed portfolio.
I don't know whether the street is sniffing a very, very strong showing from Force Motors, but that stock from the time we started the show itself has moved up even more. Now it's a 16,200 rupee stock. I'll tell you what, when we had presented it on Midcap Microscope just around 3 months ago, it was only 9,000 rupees after the sharp correction. But clearly the street is sniffing something. We are not sure what the reason is, but this stock is moving with a lot of momentum as we speak. Well, Anand, I want to ask you about another stock, that is MediAssist. The stock is up close to around 7% at the high point of the day. Any view here?
So, I mean, I can, MediAssist is not a stock that I'm currently tracking. On Force Motors, clearly the market is pricing in a kind of defense order, right? So because everything in defense has to do well, so has this company.
But I think the defense order came. There appears maybe something else they are factoring in, because the long-awaited defense order, I think a couple of months came, it did come about. I think 2,500, if I remember, the Gurkha. Yeah, maybe something more.
Possibly, maybe a higher order, but the point is that, right now we are looking for clutching at straws. So when the order comes, price goes up. When that translates into revenue, price goes up. And when that translates into profit, price goes up again.
Raymond Realty will be listed tomorrow. So that would be another company from Raymond's stable. And I think the Raymond stock itself is up close to about 12 to 13%. So any thoughts on Raymond Realty? I was just looking at the numbers. I think their revenues were about 2,300 crore rupees. They've got a gross development value of 40,000 crore rupees, 10,500 crore of projects which are already launched. I mean, how would Raymond Realty compare versus the other real estate players that we have?
So we should wait to see where it actually lists at. But the realty business in Bombay seems to be doing exceedingly well, and they have a self-owned bank, a land bank, which is fairly large. So therefore, to that extent, the initial margins that they make will be substantial. That will obviously flow through into the valuations of Raymond as well. To a large extent, probably already is. But otherwise, the realty business, if you look at other markets, I don't think that's looking too exciting to me. The numbers are still very strong, but I think we are at a stage where probably you are at or near a peak, if not already just about past it. It depends on the specific city. For example, in the city I am in, we are well past the top. The sales have dropped this year in terms of new registrations by almost 33%. Construction continues unabated. We've already seen that in some of the other cities as well, but Bombay seems to be right now immune to that kind of slowdown. So, till that market continues to do well, I would imagine that at least prices are not falling, volume pick up. Even if it sells at a certain level, even if it maintains the current level, you'll probably get a big uptick in a company like Raymond.
Today, Raymond and Raymond Lifestyle, even that should come up for you on your screen. So both those two Raymond listed companies are higher, and Raymond Realty, which lists tomorrow, 1st of July, would be the third one. The second one is Raymond Lifestyle, I think.
All right. Well, Anand, since you mentioned in the city that you're in with regard to real estate, I want to ask you about the cement stocks, but I'll tell you what, we'll get some market opinion first. Mahesh Patel, the Chief Investment Officer at Aditya Birla Sun Life, tells us that liquidity in the market is improving and valuations are reasonable. Let's listen into his comments.
Overall, I think the liquidity flow into the markets is also improving. We've seen FIs slowly starting to come back. Domestic flows have been steady. And I think valuations were reasonable. I mean, markets, after the correction, what we saw around 6-9 months back, a lot of stocks had come down to decent level. We've seen now interest coming back, not only into the frontline names. I mean, the large caps were always looking good on a valuation perspective. But even the broader market, right, the mid-cap and small cap have seen a good recovery. Although I would say that it is more stock specific in the mid and small cap, not everything is moved up, but clearly I think the confidence is coming back. I mean, IT sector was the first one to underperform, right, earlier because of global concerns. And I think on that front, I think US, where you were expecting a recession, the probability was much higher around, say, 3-4 months back. Now that has receded. And it looks like at least the commentary also from the IT companies is that the worst seems to be behind. That doesn't mean that you will see a sharp recovery over there in terms of volume growth. It will be still slow and tepid. But I think this is a sector where I think overall stability, I think, would be there. I think the downgrade cycle seems to be behind over there. Also, the cross-currency impact also could be slightly positive, at least in this quarter.
Welcome back. Markets off the lows, though we're still down close to around 120 points. Broader markets doing better. But before we went into the break, Anand was telling us that in his side of town, he believes maybe the best of the real estate is already in the price. But Anand, the street is speculating that there could probably be some inorganic growth on the cement companies. And that's why after a treacherous past year, actually, you have stocks like Sagar Cement, Deccan Cement, they are bumped up in trade. And there is hope that there could be some consolidation. What's your view on these names?
Well, consolidation has been an ongoing process for the industry for a while now. We have now 2 or 3 large players, and they are clearly now becoming more and more dominant in most. In fact, in most of the subsegments of the market, if you see, the top 2 players now probably control at least 70% of the cement supply, and that's probably why your cartelization of prices has been able to sustain much better than it did in the last cycle. But that said, right now also the capacity addition that is happening in the industry is outstripping the demand growth. And therefore, the ability to continue to maintain an upward trajectory in price as well as volume simultaneously seems somewhat weak. On the other hand, we are also seasonally in a poorer side of the market because you are in the monsoon segment where you will have lower sales. So what we are looking at among the smaller players is clearly M&A action. And that is, it's difficult to understand which one of them will be sold, but almost anything which has a few million tons of capacity and more importantly, access to limestone is something that would be a fair target to look at for acquisition.
We've had 2 big deals in the last couple of days. One of them is JSW acquiring AkzoNobel, and the second one is the one in pharma, Torrent Pharma and JB Chemicals. Any thoughts? Is there any play in either of these 2 M&As?
So in the first one, in the paint sector, I think M&A was necessary because, again, we had two new players coming in. They would be fighting for market share. And that is exactly what you're seeing, that, they have actually, one of them has been aggressively acquiring and has increased the share of their market share. They're now the fourth. That said, is it over quite yet? I don't think so. Grasim has done quite well. They have actually managed to set up a huge capacity as well as, and not lost too much money on it, probably less than what was originally thought. And their market share increase has also been fairly significant. But will they be happy with where they are? I doubt it. So I think there is probably at least another 3-4 quarters of market share juggling that will happen before the market settles down into a more playable area. Till then, I would imagine that prices will remain somewhat subdued. There will be outperformers like we've seen in merger, where they have obviously managed to do quite well, and therefore the market is rewarding them. But the question is whether you want to bet that trend will continue or there will be a new leadership emerging. The other one, JB Chemicals, obviously, again, similar things. Torrent has done well. It is way more expensive than JB is, and though its EBITDA margin is a little better, it's not as if the market has not already rewarded it for it. So from that perspective, it's good time to be actually able to consolidate. JB was the target again because you had